Welcome and good afternoon, everyone. Thanks again for joining us for another webinar here. We'll be taking time today to take a closer look at the self-employed income support scheme. So the new scheme that Rishi revealed to us at the end of last week around how the government are now going to extend their support from beyond just employees to the self-employed workforce in the UK as well. Now, as Rosie mentioned, we'll leave the Q&A open throughout the talk today, and Rosie will point out to me anything that I can pick up as we go through. So do call out things that you want clarity on as we go through, and I'll do my best to pick it up and drill down into it a bit further. So let's just start off having just putting this within context of what else the government are doing right now to help small businesses, as it's not just the self-employed income support scheme that will be useful for self-employed individuals out there. So just a quick rattle through. So at the top of the list, we've got the big one, the coronavirus job retention scheme. So this is the scheme to help businesses that have employees in their business to give them funding for certain types of employees that they're putting out of work for a period of time, to keep those businesses in play and those employees employed. So those of you who do have employees within your sole trader or partnership businesses, this is going to be open for you as well. We've got a number of cash grants, largely focused at the hospitality, retail and leisure industry. So it's 10 and 25k level assessed on rateable values. We have the coronavirus business interruption loan scheme. So these are the government guaranteed loans distributed through your normal high street banks and a number of other lenders, covering things like term loans, asset finance, and overdrafts, and they're available to any business, including sole traders and LLPs at the moment. So this is an important one for you actually to pick up and probably talk to your bank manager or your bank contact relatively soon about. We've got the business rates tax holiday, again targeted at the retail and hospitality and leisure business. We've got the income and VAT payment deferral. So for those of you who are VAT registered, your VAT payment due over the next 3 quarters, whichever one it falls in, that can be deferred until 2021. So it's not a credit against that VAT. You will need to pay it eventually, but you don't need to pay it for 12 months. And then what will apply to I think everyone this call is your July 31st self-income tax payment. So the on-account payment towards the current tax year, that does not need to be paid. You would just need to pay your usual tax payments in January 31st, 2021. So then the big one for today, the self-employed income support scheme. So what is this scheme? So the government have announced that they're going to pay to self-employed individuals and partnerships. Okay, so that's those of you who are sole traders who are members of an LLP or a traditional partnership. You're going to receive a cash grant worth 80% of your normal profit number with a cap of 2.5 grand for a month, and for currently to be covered over 3 months. Now, a few things just to drill into here. This is profits and not revenue. So remember that revenue is the top line income that you're receiving from your clients, your customer base. Then after you deduct all your expenses, so your travel, subsistence, professional costs, that profit number at the bottom of which you pay your income tax on, this is the number being assessed here. So it's 80% of that number with the 2.5 grand cap. Now, just to reiterate here, that this is for self-employed individuals, partnerships and LLPs. This is not for limited companies. Now, we'll look at that in a bit more detail coming up, but it is only for self-employed individuals here. So let's just drill into some of the qualifying, or all of the qualifying criteria as we know it now. Now, as we've started to, just to clarify, as we've started to see with a lot of these schemes that the government are announcing and rolling out, every 24-hour cycle we learn something more. There's some more detail added to either the text that the government are releasing, or just via the normal news channels, we're picking up clarifications that various different ministers or civil servants have made to the press. Now, we'll always try to incorporate that into our documents and circulate as much as possible. But as of today, this is what we know to be the case. So, as I said, so first of all, you must be self-employed and a member of a partnership. So this is not going to include those of you who run your business via a limited company and receive your income via dividends or via small payroll. This does not include property income or other investment income. So those of you who are landlords, perhaps with a buy-to-let portfolio, the income that you receive, so your property profits, is not included here, not as we know it at the moment. And those of you that maybe are receiving investment income, so dividends from a portfolio or interest from loans, that will not be covered under this scheme. Second point here, so you must have lost profits due to COVID-19. We're not sure how this is going to be assessed, and it's probably going to be a declaration that you're going to have to make. Third point, very important, that you must have filed your 18-19 tax return. Now, most of you hopefully have had this complete. So the filing date is usually 31st of January. So most of you have filed your return and you've paid your tax due on Jan 31st. But the government recognises that it's not always the case that people manage to do that in time for a number of reasons. So they've opened up an amnesty to say, hey, file your return by 23rd of April. I believe there's going to be no fines or penalties at that point. Perhaps if one of my team can clarify that during the call. But you must have it by 23rd of April, otherwise you will not qualify. So what is very clear here is HMR, or the government, and who are administering this scheme via HMRC, are assessing this entirely on self-assessment data. So if you're not putting that data into the system, then you'll just fall outside of the scheme. Next point, you must be currently trading. So if you close down your partnership, your LLP, your sole trader last year, and although you would have put a self-assessment in for that year, and you would have paid tax on those profits. If you were not trading prior to the start of the crisis, you will also not qualify for this scheme. So it's clearly targeted at those who are currently trading or struggling to trade, and it's trying to fill a gap in their income. The next one, so the £50,000 limit. So this is very important and picked up a lot of stuff in the press on it. So the trading profits must be less than £50,000. Remember, this is not revenue, it's trading profits. There'll be a number of you on the call today, perhaps with revenues over £50,000, but the data shows that most self-employed individuals, so individuals who are not in limited companies, what have you, I think the government called out it was 90 to 95% of self-employed individuals actually have profits of less than £50,000. Personally, I think that this will trip up a lot of you who are operating in partnerships and LLPs who have more scaled businesses, but chose to structure as that sort of legal entity rather than limited company. And you must have a self-employed income worth more than half your total income. So I think that this particular point will trip up those who perhaps have a job for the most part, so they're employed perhaps as on a construction site or whatever with a large construction firm, and then you perhaps do a side gig, so you do some jobs for your own clients on the weekends or evenings. If that income does not make up over half of your total income in your tax return, then you also will not qualify for this scheme. Rosie, we have a question.
Yeah, we've got a question from Lawrence Poole, who says, how do you show that you've lost income to the virus? So should they be keeping certain documents? Have you got any advice on that?
It's a good question. So there's not a lot of clarity at the moment on this, and what we keep hearing is HMRC are going to assess you on the data they have. Now, clearly, they have no data on your current trading environment. So personally, I suspect it's a declaration you're going to have to make, and it's a declaration that if at some point you were checked by HMRC, you'd have to prove that either through your P&Ls, looking at your trading numbers during that period, perhaps your bank statement. But my recommendation is keep a narrative, so perhaps keep a one-pager of some bullet points of what's happened to your business over that period, so you can defend that position if you ever needed to. Rosie.
Yeah, one more question about, I think you said you're going to come onto this later, but the difference between self-employed and limited companies, but with just one employee who is the owner of the limited company.
Tell you what, let's cut. So we've got a specific example, a question on that later on in our FAQ. So let's jump back to that then. We are getting lots of questions in generally about that, but we'll focus on that in a few moments if that's okay. Okay, so these are our main qualifying criteria, which hopefully will cover most of you on the call today. Now, let's just take, I thought we'd just take a moment just to do a very basic worked example, and apologies if I'm teaching you to suck eggs, but this is just to make sure we've got complete clarity on what this profit number is and how this averaging works. So I might not have mentioned that before, actually. So the profit number of which they're applying this 80% to, and with the cap of 2.5 grand, is going to be either the average of your profits over the last 3 years, or if you don't have 3 years of trading figures, the average of what you do have. Okay, so 2 years, if it's 2 years, if it's just 1 year, then just that last year. So let's just look at a small worked example here of a small trading business that's been operating for 3 years, possibly longer, and let's have a look what they're going to receive. So over the 3 years, we've got them earning profits, not income, profits of 50,000, 39,000, and 43,000. So if we average that across the 3 years, we have an average annual profit of 44,000 for the period. Now, we need to convert this into a prorated monthly amount, so we split it up into 12 months. So 44,000 divided by 12 gives us £3,666 a month. Now, we have to take the lower of this number, 3666, or 2500. So 2500 is clearly the lower one. So the amount that this business would receive would be 3 times 2.5 grand, so £7,500. The 3 comes from, because at the moment, the government have said we're going to operate this scheme for a 3-month period, backdated to the 1st of March. Now, it will possibly go on longer, and I'm sure that will come in the Q&A later. But at the moment, we just know it's a 3-month period. Now, if this individual was earning, or the average annual profits were less than £30,000 a year, then we'd find that the average monthly amount would be less than 2.5 grand. So if your average monthly amount, your average monthly profits are less than 2.5 grand, it's this number that we then times by 3 to get the number that we need to cover under this profit scheme. We times it by 3 to get to that point. Okay. So hopefully that gives a little bit more clarity here. Yes, Rosie.
Yeah, I've got a question from Graham Hills about how does profit equate to LLP drawings?
So actually quite a technical problem here, question there, Graham. So LLP drawings and profit are actually 2 separate things. So remember, in an LLP, the money that a member or a partner puts in and takes out goes through a current or a capital account in the LLP. The profit number, the number that you get assigned by the LLP each year to pay on your income tax return, this is the accounting profit, so the income minus all the costs, perhaps with some tax adjustments to apply to tax law, and it's the number you get assigned to pay in your income tax return. But you may draw money more or less than this. Now, how you get to a position where there's more or less money you can draw, it's probably a webinar for another time. But drawings and LLP are separate than the profits that you pay tax on. Okay. Okay. So the question of how and when do I access? So just deal with the when first of all, as this is kicked up quite a stir in the press over the weekend. It appears that the government see this as quite a complex scheme to roll out, and they're currently priority focused on the employee scheme. So that's the ability for the government be able to fill this 80% wage gap for those individuals who have been furloughed in a business. That's their priority. So they've announced that the scheme potentially is not going to be available to pay out until June. So there's going to be quite a gap for self-employed individuals to receive that money. Now, it could be that the government finds a way to release the money earlier, but at the moment, I think my recommendation is you should build your plan and your expectation in that you're not going to receive this money until June. So you need to be making other arrangements, such as looking at getting an overdraft from the bank under the coronavirus loan scheme, or a term loan of some kind, or indeed just finding other ways to finance your business or be creative of how you're generating income during that period. Now, as I mentioned earlier, HMRC are going to be the organisation administering this scheme. And the scheme will be based on the self-assessment data that HMRC currently holds. So they'll be doing the calculation of what they think you're owed for this period. However, you do what seems to be the case, and the wording from the government is that you will apply for it. So you're still going to need to make a declaration to HMRC that we have had trading reduced. Now, how you back that up, it's not clear yet. And then HMRC will do that calculation and will pay out the money. And it appears that the money will be paid out in one lump sum. So this maximum of £7,500 in June. Okay, so at the moment, there is nothing that you can really do or need to do apart from ensuring that your self-assessment is filed. So make sure that it is an action to take today to get hold of your normal client manager or partner to help you get this tax return filed if it's not already done. Okay. So let's deal with some of the questions that we've, myself and other partners and client managers have had in over the weekend and last week. So we've already had the one on this call. So I'm a director. I run a limited company. It's just me in it. Perhaps I've just got one other employee. I usually remunerate myself through the usual tax efficient mix of some dividends and a small salary to make up my tax-free allowance. What about me? So at the moment, the answer is pretty clear. You will not qualify for this scheme. Okay, so this scheme is targeted at those with self-employed income on their tax return, so from a sole trader or a partnership, not those who declare dividends, so pay income tax dividends at the lower rates, or are remunerated through a PAYE scheme. So what do we do if we're in this case? So first of all, over the weekend and towards the end of last week, there was clarity that directors who do receive income via PAYE from a company, they will be eligible for the coronavirus job retention scheme. Okay, so this 80% cover for salaries if they're furloughed. So we'll just look at that in a few moments. Up to the cap of £2,500 again. So unfortunately for most of those who are directors of very small limited companies or sort of contracting entities, is most of the time your PAYE salary is between £6,000 and £10,000 a year, and you make up the rest using dividends. So 80% of on a monthly prorated basis of the £6,000 to £10,000 is not going to be a lot. Okay, so it's not going to solve the problem for most directors and director owners of small businesses. So what is important for you to do is probably be searching whether your bank can support you using the coronavirus loan scheme. Remember that this does extend to overdrafts as well. So even if you see yourself, well, I think I'm going to get through it, I think it's okay, business has dropped off, but people are just slow paying, it's worth talking to your banker, so whoever you bank with at the moment, about extending or putting an overdraft in for you. As you'd only need to use that obviously in a worst case scenario if your cash was to dip into it. And just on that point as well, it's worth emphasizing that towards the end of last week there was a lot of pressure on the banks to look at the personal guarantees that they were requesting on these loans. And what most of the high street clearing banks have done now, I think HSBC, NatWest and the others, Barclays, they've removed personal guarantees for loans below £250,000. So it's definitely worth reaching out to your bank manager today if you're a director of a small business or a contracting business to see what they can do for you. But I also just had a message in from a colleague just to clarify. At the moment, it doesn't seem there's going to be any fines or penalties for those of you who have not yet filed your 18-19 tax return, but as long as you file it before this 23rd of April. Rosie.
Yeah, we've got quite a few questions coming in, so let's just cover some of them off. We have a question here from Lawrence Paul again. I'm just completing my accounts up to the 5th of April 2020. Can these be taken into account?
It's not clear at the moment. At the moment, it's government is asking people to make sure they file the return for 18-19. I'll put that question out to my team to try and pick up in the background as we go through. But as I understand it, at the moment, it will be the last year will be your 18-19 year.
Okay, and then we have a question about the self-assessment grant. Simba is asking, for the self-assessment grant, is it 80% of the final averages you went through?
Let's go back to our example. So it's so just to clarify, and that so probably wasn't very clear in the example I'm giving through here, in that it is 80% of the final average there, with the cap of the 2.5 grand. So similar to the way the employment one works. Well, sorry if that didn't come through in the worked example there. So 80% of your normal profits with the cap of 2.5 grand. Okay.
Okay, so there's quite a lot of questions coming in. Neil Hetherington is saying, are there restrictions on the amount of employees covered in a limited company? They only have 2 directors.
So there aren't any restrictions at the moment. It could be from 1 to 200 plus employees. So if there are 2 directors in your limited company and you're both employees, you can make claims of both. Actually, just on that point about directors, there's something else that we do know. So when the government have been clarifying, or ministers have been clarifying, what do we do with directors? Now, to qualify for an employee to qualify for this scheme, the employee has to be furloughed. So that is, the employer have to be asked to, or has to be, if they're director putting themselves in this position, temporarily absent from the business. Now, for a director, this can be difficult because you have various different statutory, fiduciary duties. You need to ensure that your business is filing all the returns it needs to make. You need to ensure that the business remains solvent for its shareholders, and then if its creditors if it becomes distressed. So a director has things that the law require us for them to do. Now, the directors are going to be allowed to continue those statutory duties, but what you can't continue if you are going to claim under this scheme are your normal day-to-day activities, so the running of the business, doing business development and things like that.
Mm-hmm. And we have a question from Graham Hills about the personal guarantees. He's talking specifically about the co-op and saying they haven't removed personal guarantees for loans above 20,000.
So the co-op are not part of the coronavirus business loan scheme as we know at the moment. So you'll need to approach a different bank if you want a loan of those schemes. So HSBC, NatWest, RBS, Bank of Scotland, all these banks are part of it. I think in one of the documents that we've circulated with you, and you would have seen it in your email last few days, we have a fact sheet on the various different schemes the government has, and in the fact sheet covering all the schemes there is a list of all the current accredited banks out there. But also, if you just pop into Google accredited banks for coronavirus bank loan scheme, you'll find that list out there as well. But as of at least Friday, the co-op bank were not part of that list.
Okay, and we've got lots more questions, John, but I think we can cover them probably at the end, because you're going to cover some of the points in your presentation. Just
to come back to a question around what happens if I just file a return now for the April the 5th, 2020 year. At the moment, the HMRC text, the message they actually have out on the public forums is that it will be for the 16-17, 17-18 and 18-19 years that the average will be taken, so not 19-20. Okay. That is open to change, but I think at the moment assume that it won't include profits from the current year. And I think the reason behind that is the government can't expect that everyone's going to get their tax return in early when those tax returns are due by 31st of Jan 2021. So to create a level playing field and to ensure they've got a data set that is complete that they can work from, the 18-19 will be the last tax year I think they'll use. Okay. Right, so let's just rattle down through a few more of these FAQs here. So what if I've not been in self-employment for 3 years? So we did, I think, allude to this earlier. Now, if you've been self-employed for 2 years or 1 year, the average, so this 3-year averaging will take place only over the period that you do have data. So 2 years. For 2 years, if it's just for the last year, then clearly it will just be covering the self-assessment profits that you made in the 18-19 year. Now, if you just became self-employed in this tax year, then unfortunately, and you obviously won't have submitted your tax return yet, you won't be included in this scheme as is at the moment. So you'll be having to look at other measures out there to support yourself. This is probably only a very small slice of the self-employed workforce in the UK, but there will undoubtedly be a number of people caught by this. Okay. Another contentious one that's been debated hotly in the press is, what if my average trading profits are above 51,000? So first of all, let's just clarify. So just the reason why it's important, if you think about the criteria that we went through, the scheme is not going to be available for those individuals earning self-employed income over £50,000. So £50,001 will be over, and I suspect it will be a black and white cutoff. Like that. But just to clarify exactly how do we calculate the right level of profit to be assessed on this. So the HMRC, the government guidance reads, your trading profits on, for the 18-19 year, so it's going to look at one of those, or the average trading profits across the 3 years. And whichever one of those, if one of those is below £50,000, then you'll qualify. Okay, so for example, if you're 3 years, 16, 17, 17, 18 years, or before that were higher than £50,000, the average. So that brings up the average to perhaps £100,000, but your 18, 19 year was £20,000. So you had 2 really big years, perhaps 200 grand, did some property deals or what have you. Then your income came tumbling down 18, 19. As long as that 18, 19 profit number is below £50,000, you will qualify. Okay, there's a lot of questions coming on that, but it does appear that even applying that criteria, if you are £1, £2, £100 over £50,000, you will not qualify for this scheme, and you will need to seek other ways to support your business through loans, etc. Okay. What options are available to you if you can't access the scheme? So if you're self-employed, perhaps your profits were above £50,000, perhaps you just became self-employed, so you're outside of this, or perhaps your self-employment income only made up part of your income over the last 3 years, perhaps below 50%, and you've lost your other job as well. So in this case, you'll have to start falling back on the benefit system. So we know that the universal credit system has been made open to all people, self-employed and employed. Unfortunately, the universal credit system is not particularly generous, so it is just providing money to get by. So you can talk to your client manager partners for more detail on this if it is going to be relevant to you. And obviously you can get onto Google, and there's lots of good information out on this. But just as a rule of thumb, that if you are a couple and you're over 25, the universal credit will be around £500 for the household. And then if you have children, you get top-ups on top of that. So 277 for the first one, 230 there forward. Now, the press are hotly covering that there is a struggle at the moment in order to get access to universal credit, because obviously the demand has just gone through the roof. The government are sticking by a line saying we are paying out lump sums as soon as an application is made and then adjusting it later as required. But I'm seeing coming through the news feeds and a lot of information contrary to that. So if you do need to make a claim under universal credit, I highly recommend that you start that sooner rather than later to cover yourself. Okay. So that's most of our information we can share at the moment. So what we can do now is spend a bit more time covering the Q&A. What we'll do as well is if you've got everything you need as well now, feel free to drop off the call or stick around for the Q&A. We'll keep it open for we'll answer as much as we can for maybe 10 to 15 minutes, and then we'll look to end the call. Okay,
got loads of questions, John. So we had a couple of people ask back around this point about furloughed workers. Can you become, as a director, a furloughed worker and then change when you then find work? How does that work?
So there needs to be a minimum of 3 weeks to be furloughed, is looking like what's coming through in the advice from, or the legislation from the government. But remember, it's only accessible for 3 months. Now, like with a lot of these schemes, they're likely to be extended for as long as the government are enforcing measures that keep certain businesses out of business. We could see that being extended. But if you work on the basis that it's a minimum of 3 weeks and a maximum of 3 months at the moment.
Okay.
And you can't find other work in that period as well. So if you're able to find other work, then the furlough's not going to apply to you.
Okay, and then we had Roland Belgrave just checking on this point around self-employed limited. He's saying, I'm a director paying myself dividend wage every month. Am I eligible for the 2,500 every month or not?
So you're not under the self-employed scheme. So to reiterate, so dividends and PAY income from a limited company, even if you own that limited company, so from your perspective, perhaps you feel self-employed, but via the mechanism of a limited company, dividends and PAY are not covered. It's just on your tax return when the line that says self-employed income, if you've got anything in that, that is the amount that it will be assessed.
Okay, and we have a question from Lauren Whitting. The self-employed income support, do they have to pay this back at any point?
No, so it is being worded as a grant. So this is money that will be permanently yours. So it's not like the VAT deferral or the income tax deferral, which you do need to pay. Those are not being credited in 2021. You must save up and you must make sure you can pay that then. But this maximum £7,500 for the £2,500 times 3 months will be a permanent grant for those who are self-employed and qualify for the scheme.
Okay, and we have a question from Angela Webb. She's saying she's her husband's executor and his income comes from his estate. Is this eligible for the grant? Holiday let on an estate.
Holiday let. So it's unlikely that it will qualify, as self-employed income usually comes from an individual that are undertaking that work. So after death, then that can't continue. And if there are assets that you're earning money from, so holiday let assets and the like, property does not qualify as self-employed income. Okay, so that on your income tax returns, a property is its own line in there, just as with dividends or interest from loans.
And we have a question from Steve Gibbs about this profit question. He says, I assume profit is before capital allowances, AIA. Is this correct?
So it's a good question. So is it taxable profit or is it book profit? Now, it will almost certainly be taxable profit. And the reason I conclude then, so it'll be after all those different capital allowances applied to it. The reason I say it almost certainly will be that is that we know that it's HMRC who are administering it and they're using it with data that they have. So they're looking at the profit number that you put in your self-assessment. So I think work on the basis that it is after the application of AIA and other types of capital allowances.
Okay, and we have another question from Graham Hills saying, can you still do some work and claim the grant?
Well, as presumably, Graham, this will be under the self-employed scheme. So it does look at the moment that it's unlike the employed one, where you have to furlough and stop work. The self-employed one, we just have this phrase, your business has been impacted, the loss of income due to COVID-19. So I read that as I can continue to try and trade, but my profits must have been impacted over that period. So I'd say, yes, continue trying to run your business, do what you can to keep that business going, but and also make the claim for the £2,500.
Okay. And Vanessa Bibby says she has no income or profits, so will she have to pay VAT?
Well, if you're VAT registered and you have no input or output VAT during that quarter, then I suspect your VAT liability will be zero. Perhaps your VAT liability might even be negative, so you're due a refund from HMRC. So if you do have a liability to pay over, you won't need to pay that over for 12 months, so until next year. If you do have a payment, so your income, your input VAT is more than your output VAT, then you're still due to receive that refund from HMRC. So HMRC is still paying out refunds to businesses, and this often applies to businesses in the construction sector that are working on building new homes. So we have lots of questions coming in from contractors about that. So you still receive your payments, but you don't need, for the next quarter, at least, you don't need to make your payments. But I highly advise that you start making set aside cash to get ready to make that VAT payment later on, as it could catch you unawares next year once the business has gone back to trading normally.
Okay. We have a question from Emily Meach. She says, if a limited company has been set up in the last year, but the previous 3 years' tax returns were based on being self-employed, will the new limited company with no tax returns affect the claim?
I suspect you'll have to go back to the rule of over, do you currently earn, so I'd say that's probably in the 18-19 tax year, do you currently earn more than, earn income, and let's get my wording right here, so that 50% or more of your income is from self-employed in the 18-19 year. So I'd say that's the test you need to look at. As long as in that year it was more than 50%, then I suspect you'll be fine. If one of my team in the background can check that out, then that would be great.
And we have a question about the universal credit point from Lawrence Poole, who's saying if he's continuing to work in some capacity as self-employed, can he still apply for some extra universal credit?
I suspect not. Now, I'm not too much of an expert in universal credit, but the universal credit system is there for the unemployed, and it's been extended to those who are self-employed who find themselves not able to trade their business. So I suspect one of the questions in applying for your universal credit will be around, are you trading at the moment, and if you are a little bit, then you might not be able to claim for that. But I suspect go through the process, look at the questions you're being answered, obviously answer to the best of your ability through them, and see where you get. If you're still having trouble understanding that process, then reach out to your normal partner or client manager, and we can take a closer look at that.
Okay, we've got some other questions, John, I think the client managers can follow up with because they're quite specific.
Yeah.
I think that's, do you want to have a scroll through as well, John, and see if you think there's any that are relevant to cover now?
I've had, I think I saw a message from Graham Hill again, coming in around questioning about this bank and not being able to access this loan. I just want to deal with that because this is quite important, as we know that a lot of our clients will be relying on these credit lines to keep open. So what Graham asked was that, he's approached another bank, HSBC, I think here, and they won't provide him with a loan that they can extend to him unless he opens a business account there. So the question I think is around, do I need to open this business account, and how long will it take? Now that will be down to bank by bank what they'll require you to do. To emphasize is that the government are not distributing these loans. They are asking, so via the British Business Bank, who's coordinating all of this, they are just guaranteeing loans that our normal banks are providing. And those banks are still writing commercial loans. They still have to write them with a view to a profit. So if you are basically bust and unable to service a loan, they can't service that, they can't provide that to you. They still need to assess that, okay, actually, if I provide you this loan, you'll trade out your current situation, and we'll be able to repay the loan. So it is down to the banks in order to structure their loans, and they may require to have a business bank open with them. Now, anyone who's tried to open a business bank account in the last few years will know that is becoming harder and harder to do that because of the KYC, the know your client requirements that banks need to go through. But if you just make sure that you do a bit of pre-prep before approaching a bank and get all those documents and things in line and ready to go, you should be able to go through that process pretty quick. We've actually circulated on a few emails, and we'll continue to circulate them. A short document which is a prepare for lending checklist. And on that, we include things like making sure you've got your passport copies and bills from all the directors and significant shareholders. You're getting them certified by lawyers or accountants ready for the bank before you approach them. But I think just prepare for the worst and prepare that the bank's going to need a lot of information, and it might take a bit of time to open that account. So start that application now.
And we have a question from Lauren Whitting, who says, if she's not paying her tax in July 2020, does that then mean she needs to pay it in January 2021 to make up for the unpaid tax?
Yeah, it will do. So remember that the July payment is an on-account payment that goes towards the final calculation of your income tax, which we've got to do before Jan 31st. And Jan 31st, you top that up, and then you pay your next on account payment towards next year. So what it will mean is that there is more that you will have to pay in Jan 31st because you're not doing your payment on account in July, which will go towards that. So where you can, make savings, put money aside to work towards that. And if indeed you're not distressed at all and business is going just fine, then you're amongst the lucky few, but you should consider whether you should just make that July 31st payment as usual, for peace of mind.
And John, there's two more questions in the Q&A. I'm not sure if we should cover them now or whether they're to be followed up afterwards because they're quite specific.
Let's leave specific ones then for following up afterwards. Just keep
I think
one
the
to our
client managers
group.
can get back on those.
Yeah, we'll do that. Okay.
And the only other point, just to check, it's clear for everyone. I've had a couple of questions again about this furloughed workers. Perhaps you could just clarify once more, if you make yourself furloughed, what time frame? Can you change it? A little bit more. Repeat on that.
Okay, fine. So if you are a director, the message that is out there now is that you can become furloughed in your own business. While you are furloughed, you can still carry out your statutory duties as a director. So remember, as a director, it's your responsibility to ensure that the shareholders' cash, which is probably your cash, so the assets in the business are continued to be protected, that you've got filing duties, so you have to file accounts, tax, VAT returns and things like this. So you still need to ensure all those things are happening. Okay. But what you can't do is continue trading your business and doing the things you would do outside of those other requirements. So you can't continue your business development activities, you can't continue your consulting activity or whatever you did via your limited company. Okay. The information we have at the moment is that the minimum you can furlough an employee, including yourself as a director, is 3 weeks, and the maximum at the moment is 3 months. So like a lot of these schemes, they're running for this 3-month period, which is being backdated to start at 1st of March. But our expectation is that if we do go into longer periods of lockdown and government measures to keep the high street closed and the rest, I suspect, but I would not count on these measures rolling over and continuing for a bit longer. Okay. I hope that's clearer.
And just think one last question then, John. From Simba, will there be leniency for paying 2018-2019 tax liabilities if you're filing late?
So if you're filing late, at the moment there's a message saying that there's going to be no penalties or late filing fines for getting that in. However, in terms of the payment of your tax, I don't know if that legislation will apply to it. So that's probably quite a particular case. I would assume at the moment that if you were not able to pay your income tax associated with that period, you'd probably get a generous time to pay arrangement with HMRC. So remember that outside of the two big statements of you can defer your VAT and you can defer your July payment, we know that HMRC have been encouraged by the government to be lenient on your pay, your time to pay arrangements. The time to pay arrangements is what HMRC call doing a deal with HMRC to spread the payments of your income tax return or any other tax. And we always say, that if you approach HMRC in the right way, even before this crisis, they've been very supportive of keeping businesses in business, but you must always file the particular relevant return, VAT return, income tax return, disclose your liability, and then immediately contact HMRC, letting them know that you're going to struggle to pay it, and give them, very good reasons of why that's not going to happen again. I'm sure within the current climate, they'll take pretty much any reason. And it always helps to be able to pay something up front. So if you owe them £10,000, say, hey, I can pay £1,000 now, and then perhaps we can do £2,000 a month for 5 to 6 months afterwards, or 4 to 5 months afterwards. But I think they might be offering schemes up to 12 months. Usually we see 3 to 6, but I think we'll see more 12-month arrangements being agreed. I hope that's useful.
Okay, John, we've still got more questions. Do you want to finish now or carry on?
Let's slip in one more, and then we'll bring
one
this
more
this
then.
into a close.
Back on this furlough issue, Neil Hetherington, can you still draw dividends if furloughed?
Yeah, I'd say you could. So remember, a dividend is not remuneration for you as a director. The PAY is the only remuneration that you receive formally as a director. A dividend is an award to a shareholder, which is a distribution of profits. So if you still have cash in your limited company and you still have distributable profits, so the bit on equity in your balance sheet, so I can still legally hand out dividends, then there shouldn't be any reason why you can't do that technically. So I'd encourage you still to do that for now, but it's your PAYE part that will be covered by the furlough and the 80% cover. Okay,
great. So anyone who's got more detailed questions, I've answered you individually to contact your client manager or contact myself or John, and we'll forward it on and they'll get back to you. And also, John, do you want to explain about the webinar tomorrow?
Sure. So thanks, Ray. So we're going to run another session tomorrow where it will end up being quite a long session, I think, with the number of questions we're coming in here. But we're going to run a review of all of the measures that that the government is offering small business. So we'll be looking again at the loan scheme, we'll be looking at furlough workers, again, be looking at the grants, the business rates, holiday, all those bits. So we'll take each one and we'll update you on what we've learned over the last week on some of the little points that we think are useful for businesses to know. So we'll be running that again at tomorrow at 12 o'clock. And so by all means, join again there and ask anyone else that you know that could do with some help now to join also.
Okay, great. So I will send round the recording shortly after this, and there'll be a link to register for tomorrow if you haven't already. And as John said, feel free to share it with colleagues and other business owners, and we'll get through as many questions as we can tomorrow as well.
Great. Thank you very much, everyone.
Okay, thank you. Bye.